What's up, Banter fam? I hope you're having a lovely day. I certainly am because I'm looking at the Bitcoin and the altcoin charts right now, and I'm seeing some pretty big moves across the board. Bitcoin's actually pushing up to try and push this 40K region. Obviously, it's a key region of support and resistance, but a lot of altcoins are responding very, very strongly at the moment, and that was off the back of the FOMC meeting today. So I want to break down exactly what I think the meeting means for crypto as a whole. I want to break down two trends that I'm seeing in DeFi, which I think are going to change the landscape of DeFi for a long time. And then I'm also going to give you my thoughts on what projects could potentially benefit the most from the narrative that I'm going to share in regards to DeFi. So a massive show today, got a lot of ground to cover. The market is heating up again, which is entertaining because I know a lot of you guys have been complaining about the market being boring recently. So we've got some volume. Let's get straight into the show. Okay. It's clear to see if we look at the charts that the meeting was more positive than expected. Going into the FOMC meeting, I did say that I was expecting the market to respond positively or be flat because oftentimes we do see market announcements priced into the market before they happened. And I know Ran shared that thesis on the show yesterday as well. And exactly what we thought happened actually ended up happening. We saw that the announcements were pretty much in line with exactly what the market was expecting. So here's the summary of the Fed decision. The Fed decided to raise rates by 50 basis points, which we were expecting. The balance sheet runoff is to begin on June 1st at $47.5 billion a month. No real surprises there. The Fed expects ongoing increases in rates. So this means that they're gradually going to increase interest rates over time in order to curb inflation, which was the major message of the meeting today. And the Fed said that it is highly attentive to inflationary risk. So it is trying to reduce the risk of creating further inflation. And that is the whole point of these rate hikes. So if you look at this decision at face value, you'll notice that this is kind of negative for the market, right? Because it could indicate that, inflation is quite high, which means that they could be responding quite strongly to these changes. However, the market had priced in a lot of these decisions before it even happened. We knew that 50 basis points was well on the cards. So the fact that they came out and labeled it at 50 basis points was exactly what investors were expecting. Now, Powell actually said, and this is the real reason why we got the bounce today, Powell said that 75 basis points won't be happening in the near future, which I think overall is a win for crypto as a whole, because obviously the 75 basis point hike was what the market didn't want. That was the worst case scenario that investors were trying to avoid, and we didn't get it, which is a really strong sign. So overall, that is a win for crypto as a whole, and we saw the market actually responded quite positively to this news. We saw multiple gains across the board. I think Bitcoin was up 5.2%. We saw multiple altcoins up 9.5% for Polkadot, Avalanche up 12%, Near up 10%. Look, obviously, you've got to take this with a grain of salt because the market had come down quite a lot. But at the same time, we are seeing some pretty big gains across the board. I mean, we haven't seen this much green in a while. So it's nice to see the market starting to respond a little bit. Phantom, a project that was hit quite heavily, that's up 11% today as well. And Rune, Thorchain really dominating, up 16% for the day. So CoinGecko is responding very, very well. But I want to work out where this market is going to be headed in the future. Obviously, we can't just look at the changes in prices today and assume that is the trajectory we're going to take, because the market fundamentals and the macroeconomic conditions are very, very different to how they've been in the past. This is pretty much unprecedented times as a whole in crypto. So if we want to successfully navigate the altcoin market and become profitable investors in crypto, we must use Bitcoin as our overarching measure to determine altcoin success. Basically, we have to be tracking Bitcoin to work out where the rest of the market is going to go. You guys have to remember that Bitcoin is essentially a leveraged long on the NASDAQ right now. Bitcoin correlation to the NASDAQ is still extremely high. And until Bitcoin decouples, which I think will happen in the future, we're still going to see a market reaction where Bitcoin reacts as an extension of the NASDAQ. Now, altcoins, they're an extension of Bitcoin. So when Bitcoin moves, say, 10%, altcoins usually move 20 or 30%. And then you've got your DeFi alts or your ecosystem alts, which move even further than those other altcoins, than your larger altcoins. I mean, if we get a 20% move from a Solana, let's say a Radium or a Saber, which is underneath the Solana ecosystem, those projects might move 40, 50% plus. So let's have a look at the Bitcoin fundamentals, because I believe the best way to work out what is going to happen in altcoins is to work out what is going to happen with Bitcoin. And I have a few interesting points of data that I want to show you that could give us some indication as to where the market will be headed in the near future. The first index, which I find very, very interesting, is related to the VIX Index, which just took a massive dump. Now, the VIX Index is basically an expected volatility of the US stock market, which is derived from the S&P 500. So when we see the VIX index drop, that indicates that volatility is also decreasing. What does this mean for Bitcoin? Well, you can view the VIX as kind of Wall Street's fear index. So this is how scared the market is. So it basically is a reflection of investor sentiment. Now we're seeing the VIX plummet at the moment, which is suggesting that investor sentiment is actually increasing slightly to what it was in the past. Now, Crypto Clay does a very interesting chart here. He looks at the correlation between the VIX and Bitcoin. And it's very, very clear to see that the VIX correlation to Bitcoin is extremely correlated. So whenever we see the VIX going down, the Bitcoin price tends to pump. Whenever we see the VIX pumping, the Bitcoin price tends to come down. Now, it's clear that there is a correlation here. Correlation doesn't necessarily mean causation. That is the only caveat when we're looking at charts like this. However, it does give us an interesting indicator as to whether potentially the Bitcoin price could be faring well as a result of this volatility dropping. So that's one statistic that I'm looking at that gives me confidence that the Bitcoin price maybe for now has seen the worst. Now, this is the second thing that gives me confidence. The whales and the whale addresses at Bitcoin are starting to really ramp up their purchases. So if we look at the whales and the small fish up, we can see that this red cluster kind of indicates when the whales are buying. So it's interesting that we are seeing the amount of whale holdings actually increase during this period. And this is further echoed by this chart, which I showed on yesterday's show, which evidences the holdings of Bitcoin whales over time. So we can see quite clearly, and this is what separates whales from the rest of the pack. We can see that whales accumulate when the market is low. So when the market came down, like we saw with this this gray line here, when the market came down, that's actually when whales were accumulating. When the market went up, for example, in November, that's when we saw that whales started selling. Now, the latest dip that we recently saw, we can see that the whales have started accumulating again. So the whale holdings are a good indicator as to what the big players are doing. And we can see that the big players, they like to DCA when the market is low, and they like to take profits when the market is high. And that is something that I can't stress enough. If the whales are doing this, then why, as retail investors, aren't you doing this as well? You should be playing the opposite of the market. So when the market pumps, that's when you should be taking profits. And when the market dumps, when the market pumps, that's when you take profits. When the market dumps, that's when you should be buying. So you want to be selling into greed and buying into fear. And that is the number one thing that is kind of being spelt out by these whale holdings here. And I think that is super interesting to see that the whales are still accumulating. Okay. I've got some big news. I've got some big stuff to talk about in the DeFi space. Some of the biggest updates we've had over the past couple of months have actually happened within the last day or two. So I have a lot to update you guys on, and some interesting fundamentals that are shifting. So I'm seeing a major shift in DeFi right now. I'm seeing a macroeconomic shift, which is reflecting on the DeFi market. And that shift is meaning that a lot of projects are becoming risk off, and they're looking at ways to accrue value. So if we go back all the way into 2018, we know that a lot of projects at that time didn't actually capture that much value. They didn't really have real utility. They didn't really have real user growth. And overall, DeFi just really didn't exist. It was kind of just something that people would use as a buzzword, but it wasn't in actual existence. Today, however, we have some flourishing ecosystems based around some of the central layer ones, which are thriving in terms of user growth, transaction growth, etc. But these projects are realizing that they have to tweak their models to be sustainable over time. They can't be like the projects in 2018 that made big promises and ultimately ended up failing. These big projects need to ensure they're going to be A, sustainable, and two, be able to survive a downturn. Now, the Fed meeting today, and obviously the high inflation environment that we're seeing right now, spells out quite clearly that protocols need to be aware and cognizant of the fact that if the market drops, their tokens can take a hit. So what are they doing to kind of come in and stop this? And this is the major change that I'm seeing in crypto right now. Well, firstly, we see Anchor as an example of a protocol that has realized that it needs to change and it needs to stay adaptive to fight the current macroeconomic conditions. So we saw that the APY of Anchor protocol dropped from around 20% to 18%. And they are planning to drop this even further, all the way down to 15 as they move towards a variable interest rate instead of what was previously a fixed interest rate at 20%. Now, this is important because Anchor Protocol wants to become more sustainable. And this is kind of reflecting across multiple other protocols as well. People have seen how well the UST and Luna model has worked in terms of getting UST adoption and deriving success for the Luna token, that a lot of other projects are starting to take note of this and actually starting to copy it. Now, we can see Tron actually announced a new stablecoin. Now, this stablecoin is paying 30%. So what they're trying to do, and they're being a little bit cheeky, they're trying to come in and steal users from UST, basically. They want to offer a higher APR, and they want to get users across to using the Tron stablecoin. Now, Tron, similar to Luna, is going to have this burn mechanism, where if USDD is minted, then Tron is burnt, essentially. So they're kind of copying the mechanism a little bit. And this is actually launching tomorrow. So this is super interesting. Now, basically, Jason Sun is basically promising this revolution by Tron. He thinks that Tron can be a legitimate competitor to Luna and could even compete with Ethereum. And he believes that the stablecoin mechanism that they're introducing through USDD will be a great way to onboard new users. And this algorithmic stablecoin trend is not slowing down. We saw it with NEAR protocol launching USN, which was a slight letdown due to the APR being lower than expected. And we're seeing also, obviously, USDD now through Tron coming in, paying a higher APR and trying to track some liquidity away from Luna. Now, we can see that the Tron market cap is growing very, very fast on the back of this news. It's up 18% for the day. We can see over the past few months that it's getting this spike. So if we look at the last 90 days, I mean, it was at 6 cents. It's now spiked all the way to, I think it's like 10 cents today, or it's 8 cents. So it has had quite a large pump. So this isn't one that I'm buying. I'm not saying to buy it. But what I am saying is that it's kind of paving the way for an interesting shift in DeFi. And this is why you should care. And this is why I think it could have massive ramifications on crypto as a whole. And this is all surrounding the fact that Bitcoin is becoming the new monetary standard of crypto. Terra is setting the precedent. They set the precedent through buying Bitcoin in order to underpin the UST peg, that Bitcoin can become a genuine monetary reserve currency in the crypto economy. If banks don't want to use crypto as a reserve currency in real life, and if America doesn't want to use it as a reserve currency in real life, then projects like Luna will. And projects like Luna see the advantages to doing this. So I think, obviously, if you guys aren't aware, Do Kwon wants to buy $10 billion worth of Bitcoin. He's already bought a couple. He's well on his way to gathering all 10. He wants to do this to ensure that the UST peg has tangible backing. So if it ever has a FUD event or if it ever crashes, then they've got enough Bitcoin to come in and supplement the price. But this is very interesting, and this is kind of my thoughts on the back of the Tron announcement. I think many projects will start following suit if they're not already. I think this is ushering in a new wave of protocols that will use Bitcoin as a monetary standard. And this is very important because it sets the foundations for crypto as a whole. It increases Bitcoin's utility. It increases the amount of projects holding Bitcoin, and it also increases buy pressure on Bitcoin. So that is why announcements like this Tron announcement and Anchor Protocol, obviously capturing so much liquidity, which is great for the Luna price. That is why I'm so bullish on it as a whole, because overall, the more Bitcoin that are going to be purchased by these projects sets precedent for the market. Now, be aware that buying $10 billion of Bitcoin, it will have an effect on market movement, but it likely won't have a crazy effect. I think the larger effect isn't the actual act of Terra buying Bitcoin. I think the larger movement actually comes from the precedent that it sets. But there's another precedent being set at the moment. And this is one of the biggest narratives in crypto. And I think Rand did talk about it on the show today, but I think it could have massive ramifications. And I want to explain to you why. This narrative is institutional DeFi. We talk about it a lot, but a few things have actually happened over the last couple of days, which are starting to, I think, take effect in this market and are giving me very good indications that the future of DeFi are extremely strong. Now, there's two big announcements that we got over the past couple of days. The first one is MicroStrategy. This is massive because MicroStrategy said it will consider opportunities for yield generation on its 100,000 Bitcoin. They said that they may conservatively explore future yield generation opportunities on unencumbered MicroStrategy Bitcoins as a consideration following the $205 million Bitcoin collateralized loan issued by Silvergate Bank. Basically, here, what they're saying is that they want to earn yield on their Bitcoin, that they are actively considering opportunities to earn yield on their Bitcoin. This could be in the form of collateralized loans through official banks. This could be in the form of lending out their Bitcoin via centralized services. But I think there's another really interesting take on this, and that it's kind of paving the way for DeFi institutional adoption. Now, MicroStrategy isn't coming out here and saying for a fact that they will utilize DeFi, but it's the next logical conclusion, because the whole point of Bitcoin and the whole reason Michael Saylor likes Bitcoin is because it's decentralized. And that is a major, major bonus. Obviously, it's what the entire economy is built around. Well, if you truly believe in decentralization, then the logical way to stake your Bitcoin and earn yield on it would be through DeFi. And I think that if MicroStrategy comes on board and starts utilizing DeFi on their Bitcoin, there's no reason why other institutions wouldn't jump on board as well. And that's why I think institutional DeFi is a huge strategy. But what it needs before multiple institutions can hop on and start generating this yield is we need more affirmation from real life companies, and we need real affirmation from real entities on DeFi being a legitimate place to earn yield. We got some of that affirmation today. And that affirmation was derived from this report, a very, very bullish report, probably the most bullish report I've read on DeFi in months. And honestly, I could do a dedicated video on this, and maybe I should tomorrow. But just to give you a bit of an inside look into why I think this is bullish, basically the IMF did a global stability report. So they work out how stable global economies are, and they work out ways to work out financial stability implications. They work out ways to be able to provide stability and what is happening in a macro sense, for example, the war in Ukraine with emerging markets. And they basically outline the challenges that the financial world is facing. So this report is very, very big in the scheme of traditional finance. Today, or yesterday rather, when this was launched, they actually mentioned DeFi for the first time. And they went into quite a lot of depth on the benefits of DeFi. And this is actually quite in stark contrast to previous times when institutions or institutional reports like this, they wouldn't mention DeFi at all. Now we're starting to see a bit of a shift in the mindset of these companies in these reports to actually capture the value of what DeFi is offering. Now, in the report, IMF said DeFi has the potential to offer financial services with even greater efficiency, becoming a gravitational force that attracts a large number of crypto investors, but it may also come at the cost of greater risks and uncertainties. So IMF here is stating that they are basically bullish on DeFi. They think it has the potential to offer financial services with greater efficiency in comparison to TradFi, and they think that it will attract a large number of crypto investors. Having DeFi legitimized in a report like this is massive news. And they didn't just do a quick statement. They actually went in and explained what DeFi was. They referenced Aave compound. They had graphs mentioning outstanding debt and borrowing to collateral ratios. They went really in depth about DeFi. And this was very refreshing for me to see such a big report come out. And I think it really does pave the way for DeFi in the future. And we can see that DeFi right now isn't in a horrible state either. If we look at the overview of the DeFi market, the total TVL is 205 billion. Now, the market took a huge hit over the last couple of weeks. A lot of altcoins went down 30, 40%, but a lot of the TVL in DeFi actually didn't. We've only seen a decrease from 240 billion to 205 billion. And if we zoom in a little bit, the last month actually hasn't been that bad. We only saw a drop from 230 to 205, which isn't actually a bad sign for DeFi. And what it suggests to me is that people still need to earn yield. The whole point of DeFi is to get a return on your assets so you can mitigate downside risk. So if we're seeing money staying locked in these ecosystems, that suggests to me that that is where the future of crypto is headed. The future of crypto is DeFi, and that is my belief. That's why I come on every day and I talk about DeFi, because I have immense conviction in the space. And as I just showed you, with the institutional narratives coming in, and now some retail support as well coming in, we are seeing a market that is very, very different from what it was a few weeks ago. And the market is offering opportunities for not only gains, you guys can make insane gains in DeFi, as I have in the past, but not only that, but you can also mitigate downside risk, and you can continue to earn yield even when the market's dropping. I mean, Donkey Finance, who are an official show sponsor, we just launched a pool over there with them, for example. And I just put out a stablecoin pool, which is paying around 30% APR. And if you come in here and copy farm me using this stablecoin pool, you can earn yield on stables. I mean, how cool is that? That we're in an environment where you can earn a 27 to 30% return on stables. Now, look, I'm a little more degen than the typical stablecoin farmer. Like, I could have just done Anchor, but that's boring. We want to make some gains. So I've amped it up a little bit with a strategy on Planet Finance from some USDC to UST looping here. I've also added a Beats pool, and I've also added a beefy pool. So if you guys are involved, let me know with how you're enjoying it. I know I'm making a decent amount of money. I put some of my own money in this pool myself. And yeah, I've been following this strategy. This is just a tester account, by the way, in case you think I only have $116. You'd hope I have more than that. Otherwise, I don't have enough money to buy these damn dips. But yeah, if you guys want to get involved, take advantage of that strategy. That's there at your disposal. Remember, there's always smart contract risk. So, you have to be aware of that. And if a stable coin gets depegged, then, that is out of my control. So I'm offering you the tools to be able to earn yield on stables, but, I can't guarantee 100% safety, of course. And then Planet Finance as well. They're basically the ones powering this strategy right now. And they're on BSC, but if you guys want to lend or borrow, they're another official show sponsor, then I think they're one of the best places to do it. There's many, many strategies, and I'm going to have to cover them in the future, where you can actually earn amazing yield on borrowing and lending on Planet Finance. So those are just some examples of what is happening in DeFi right now. Now, at the start of the video, I said that I would cover some altcoins that I think will potentially perform well as a result of this institutional DeFi narrative. Of course, Luna is one of them. I think FXS, which is Frax Share, is another one of them. But I've got a couple more picks that I want to discuss in more depth, but I'm running out of time on this show, but I still want to give you the alpha. So if you do want to ask any questions and have a conversation, head over to my Instagram right now, and we'll have a conversation live on my Instagram. There's a link in the description, or it's Miles_Deutscher. And right now we'll have a chat. You can ask any questions you want about the market, and I'll answer them right now on Instagram. So yeah, let's head over to Instagram right now. Let's have a chat, and I will see you in my next show tomorrow at 6:30. Hope you enjoyed the show. Peace out.